Welcome to Coffee with Tom and Joanne. I'm Tom Matthews.
And I'm Joanne Toronto. Thank you for joining us this morning. We're really excited to have our guest, John Patrick Foley from E3 Financial Planning in Needham. And this morning, we're going to be having a conversation geared more towards first-time buyers that, is just a top-line overview of different ways to plan for your down payment. So we all know that, down payments come from different places. And John, why don't you tell us a little bit about where you're seeing your first-time buyers, the conversations that you're having with them. Tell us a little bit about where that's coming from.
So where they're getting down payments from. So there's a variety of different sources. Some of the more obvious ones, they're just saving it themselves and getting to that down payment level with first-time home buyers. There's a lot of programs out there where you don't necessarily need to get to that 20%, which can be very attractive, although it's nice to avoid that extra PMI, private mortgage insurance payment. Right. Gifts from parents are very common as well. Yeah. But also some of the sources that are not as common, people don't quite think about. The Roth IRA, I love the Roth IRA. So if you have a Roth and you're funding it and you've had it open for 5 years, you're not only able to access your contributions without any issues, any penalties, you can access up to another $10,000 of your investment gains, completely tax-free for the purpose of purchasing your first home.
Wow, that's
it's a great, yeah, it's a great vehicle. I don't think it's utilized very, very much in that purpose, but it's great if you need it. Right. Another option is if you have a 401k plan, you can do a loan to yourself. You are limited though. It's a 50% of the loan, of the balance of your 401k, up to a total of $50,000 as a loan. So you need $100,000 to get that full $50,000 out. Right. But it's a good place if you need some extra cash, you can access it. The caveat there though is it's a 5-year payment back to yourself with interest. It's kind of weird. You're paying interest to yourself. And if you're concerned about maintaining employment there, I would stay away from it, because if you separate from service for any reason, you have 60 days to put the money back in as an indirect rollover where you get penalized and taxed. So not fun when you get to that point, but if you need money in a pinch, that could be a good spot too.
Oh, wow. So for the people who are budgeting on a monthly basis, what do you suggest they do? Are there any tools? Do you suggest a good old Excel spreadsheet? How do you help people get to that point where they can make a budget like that?
Yeah, well, so I created my own in college. I created my own budget via Excel. So I love Excel, but there's now a lot of tools that are easier to use than creating your own. So mint.com is a great one that I recommend for a lot of clients to just keep track of where you're spending. It's free to use. They do have ads, so just be aware of the ads that you're going to be receiving via email and whatnot. But it's a great spot if you trust the technology to link up your outside accounts, like your credit cards, your bank statements, and it'll scrape all that data and just start to categorize it for you. So you really have a good idea of where money's going. So I think that's a good first spot. You got to figure out where it's going to figure out how much you're able to save. And as far as affordability of the monthly payment, you have to keep in mind you're paying rent typically, and so that could be shifted over to the mortgage payment quite easily. And then there's other factors too. You got to keep in mind if you're buying a condo, you have a condo fee. You have homeowners insurance now. It's going to be more expensive than renter's insurance. And you have property taxes that you're not paying as you rent, but you will owe when you own. So you got to factor those things in too.
John, I have a question for you. As you have clients who are setting up the Mint and seeing a budget on paper for the first time, where are those aha moments where they say, oh my gosh, I didn't realize I was spending so much money here, that you can help them kind of reallocate towards that down payment savings?
I mean, the biggest one is eating out, dining out. Not now, of course, right, in this pandemic, but prior to that, I know I was a big culprit of that when I first started using Mint right out of college, and just identifying that. What's great about that service, and I swear I don't get paid by them at all, but you can set up a budget. So if you find a category where you're spending more than what you realize and you want to try to curb that, you could just put a budget right in that system. Hey, I want to spend X amount of dollars on that category in a given month. and they'll remind you as you get closer to that threshold if you're about to reach it. So I was doing that with restaurants, and I put a cap on that. And three weeks in, I hit that cap, and so I curbed my behavior for the remaining week just to kind of keep that cost down. So
okay, excellent.
Yeah.
Wow, that's really interesting. I think a lot of people don't really know where they're spending their money until they have an opportunity to really put it into one place. And having a tool like that is, it's time efficient, right? So it's not putting everything into an Excel and transferring it by hand.
Right.
So using the technology, I think, is always a good recommendation. And for people who are getting, gifts from parents, how does that work? Like, is it just, and do they just make an electronic transfer, or are you seeing parents gifting, the entire down payment, people doing a combination of both?
Yeah, the combination works. I mean, so the parents have to keep in mind the gifting limits. So there is an annual gifting limit, $15,000 per year per giftor, and so as if your parents are married, then they can combine that gift. So it's 30,000, and they stay under that threshold. They don't have to file the gift tax return or pay any type of issues there. I'm not a tax preparer, so please refer to your tax accountant to answer any questions about that. But so they have to keep in mind the gifting limits. As far as where it goes, I mean, if this is something that you're going to be spending your money, spending it short period of time, like within the next 12 to 18 months, I would not invest it. Right. So yes, the financial planner telling you not to invest money, I would keep it in a very safe and liquid position because you're going to need it.
Right.
So yeah, bank accounts work. You're not going to get much growth on it, but it's going to be there when you need it.
Yeah. And how much money do you think that, once somebody achieves the down payment that they want, what do you think is a good idea for, the rainy day fund, or what should they have left over after they put their down payment down?
Oh yeah, I mean, ideally you want 3 to 6 months of your expenses in a liquid, easily accessible position. When I say easy, I mean, you can go to the ATM and grab it the same day, or you can go to your bank and grab it. So I would not include any type of retirement accounts in that category. It's going to take a week for any investment professional send money to you. They got to sell the funds and then get it to you. So I wouldn't really count that as a liquid position, or any other investments for that matter. So yeah, 3 to 6 months. Excellent. Probably closer to 6, I would say.
Excellent. That's really good advice. Now, John, for any of our listeners who might want to contact you, what would be the best way for them to reach out to you if they have their own investment questions? Because I think you've given us some great information for our listeners.
Yeah, email works. So my email address is my name, first name, John, John, at E as in Edward -3 -FP for financialplanning.com.
Awesome.
They can call me on my cell, 781-645-6101. No text messages, please. I can't do that. Compliance doesn't like that. But email works, phone call works.
Awesome.
Snail mail too, yeah.
Awesome. Well, this has been really great. We really appreciate having you on Coffee with Tom and Joanne. And hope that our listeners will enjoy having heard directly from a financial planner like yourself about how to save for down payment.
Awesome. Yeah. Thank you for having me.
Thank you. Thanks for joining us. I'm Joanne Toronto.
I'm Tom Matthews, and this is John Patrick Foley. Cheers.
Cheers.